Guest, welcome. My name is Teresa Timms, and I'm president of TDR Mortgage and Real Estate Group. I am giving a mortgage and real estate update. I think now more than ever, it counts to be as up to date as possible. If you're in the real estate or mortgage industry or some ancillary affiliate related industry, you need to have your pulse on the market. So I'm just going to give you a quick rundown today. There have been a lot of changes happening. I am what's called a mortgage broker. I highly encourage people that are seeking out a home loan to seek out the advice of a mortgage broker. That's me. A locals only, a local mortgage broker. And one of the main reasons is that we have access to wholesale pricing. We eliminate the middleman and are able to deliver on-time, successful results and the lowest rates on the market with the ability to shop multiple sources. So, what a loan product. So HELOCs, home equity lines of credit, those are gone. I don't know if you guys heard last week, Chase and Wells Fargo are not doing loans unless you're putting 20% down. So let that be an indicator of where we're headed in terms of loan availability. If HELOCs are gone, you're going to have to cash out, refinance to access money. And in this market, with the cost of money being so low, around the mid 2s for a 15-year, 10-year, and the low 3s for a 30-year, it sometimes is a wise choice to go ahead and cash out at those low rates. Buyer programs. I celebrate the buyer programs as an alternative to get people in when they don't have any money, and it's a great, amazing vehicle. However, I don't know anyone lending in that space right now. My go-to is the CalHFA loan, the California Housing and Finance Authority out of Sacramento. I love them, and they're in business. I just don't know anybody that is wanting to take on the risk of a loan like that, right? It's all about risk. So it's jumbos are largely gone. However, this week I spoke to my friend David at Refi, Dave Johnson, and he sent me some jumbo product, and I called him to find out about it. And Refi does have a jumbo product. That's one of my preferred lenders, that wholesale lenders that I submit loans to. The restrictions or the guidelines, I guess, would be very, very tight, but there are jumbo alternatives out there, and a mortgage broker is best suited to find those opportunities in lending because we have so many choices. High balance loans. So high balance loans, I have some notes down here on my little laptop, that's why I keep looking down. High balance. Okay, so what that is if the conventional loan limit across the county is 510 and you go over, and let's say you buy a $600,000 house and your loan is 550, then that puts you in the high balance space. In the Inland Empire, poor Inland Empire, they don't have high balance. So they go, once you go over 510, you're in jumbo land. And again, jumbos are scarce right now. And I don't think those are coming back anytime soon. People don't want to lend in that space right now. And this all has a lot of shaking out to do till we kind of start coming around. I kind of think it's going to be 60 to 90 days. It just depends on how quick we get back to work. Okay, so I priced out this high balance like 3 weeks ago. I have a friend, Julio Rana. Hi, Julio. I'm going to have to tag you in this later. High balance in, gosh, I forget where it was, somewhere out in LA. And it was pricing out okay, like in the 4s, high 3s, low 4s, with like a point. And I couldn't get it to price out. If somebody came to me with a high balance and I'm looking at all the options, you'd be paying like 2 or 3 points for a high balance loan, and you had to have a 700 score. So I didn't spend a lot of time finding all the different ins and outs because I'm not placing one right now today, but I did look at one for a client that's going to be purchasing in the future, and it did not price good. And so high balance. And that leads me to one of my points below, is that FICO scores are paramount. If you are going to refinance, if you are looking to purchase, don't mess around. take some money and invest it in some quality credit repair. My friend Sam Parker at My Credit Guy has excellent programs. And I think the first 30 days he doesn't even charge. So if you're buying a house and you're going to spend, 10, 15, 20 grand, what's $600 to get your score? Invest in yourself. What's $600 to get your credit in like tip-top shape? I'm waiting for home prices to drop so I can pounce. That's a great strategy, Christine. I talked to your brother a couple of days ago, and he's getting ready to pounce also. So I think that is amazing. So I think that the next 30 to 60 days, for those of you wanting to purchase, let all this craziness kind of calm down and spend time working on your credit and get those scores up. If you'd like to get information, I'll put his information down in the wherever I have the comments or whatever. And if you're just joining us, and or if you're watching this on any of my social media or YouTube, please like and subscribe and comment. It means a lot to me. And I like to know what people are thinking. I like to get feedback. I would like to be able to be a resource. And so if I know what your questions or concerns are, I can speak to that. Okay. Oh, non-owner properties. Well, this is kind of I wouldn't say bad news. It's just news. We can still do those non-owners, those properties that are rented. But again, think about the risk. So rental properties are suffering right now because people are being told they don't have to pay the rent, or you're not going to be evicted, etc. So you better believe if a lender is going to be refinancing a non-owner property, they're going to want some significant reserves on your part. I've been seeing anywhere from 6 to 12 months reserves for each investment property, and they're probably going to want to see, I haven't seen this guideline, but it's only logic that they're going to want to probably see the last 6 months of rent payments on that property too. What else? Okay, now for the good news. Are you guys ready? Ready for some good news? All right, let me scroll up so I can read it all, because I want to capture all the good news. Because bad news, it's plentiful right now, right? Plentiful. Okay, are you ready for some serious business? Rates are, I want to say that word right now, but I'm not gonna. Freaking fantastic. Oh my God. So I priced out a 15-year the other day and almost lost my mind because I was quoting a client, a highly qualified client with a lot of equity, 2.5. Actually, I think I sent that fee sheet out today, 2.5 on a 15-year loan. And he was paying like $4,000 in the amount of points or costs for the loan, plus like regular closing costs or whatever. But are you kidding me? He shaved off, or he's going to shave off, $117,000 of future interest. $117,000. His payment's going up like $150 or something ridiculous. So this is a great time to go rate and term and really take a look at preparing for the future. If you're in a position and you're working, fortunately for you, you can take advantage of these super crazy low rates. Okay. So